1. Hello, welcome back. This is Roger Royce with the 10,000 Startups podcast, where each week we bring you original content on issues relating to startups and startup law. I'm a partner with Haynes Boone in Palo Alto, and this week we are talking to Jordan Wahbeh from Silicon Valley SV Venture Group. He also runs a group called Network VC, which is a syndicate of early stage technology companies. So Jordan, we're going to talk about the funding environment. You're going to hear it from an investor, what sectors are hot, what 2025 is going to be like, et cetera. But before we get started, Jordan, I don't feel like my introduction did you justice. So tell us a little bit more about yourself and your background.
So, I love you, Roger, right?
Okay.
But two corrections. One, I'm a partner with Network VC. I'm not running it. Alexander Soroka does that. And two, you're no longer at 10,000, my friend. 10,000 was 2.5 years ago. You're probably in the 14,000 range now, wouldn't you say?
Yeah, well, maybe.
So I'm Jordan Wahbeh. I'm a Silicon Valley Venture Group managing partner. We're a small investment group, and we do most of our work with a group called Network VC, a syndicate of 280 investors. And we invest in deep tech companies, software typically. We have 67 companies on our portfolio, and we are deploying capital 2 or 3 times a month. Our model is relatively simple. We identify companies that have been well vetted by venture capitalists and so forth, and we come in at the second part of the round. I've been in the Valley since 2000. I arrived right before Y2K. I remember staying at home and turning the lights off and hoping the world would not end the next day, and it didn't, so that was good. A little bit of time at Cisco and many other companies before that, and eventually I started my journey in venture in 2015. I ran a small group called Bay Angels. They were kind of dwindling, and we lifted them up. And then COVID came in, and here we are. It's a pleasure to meet you, Roger, and thanks for having me on here.
All right, so tell us, how bad was 2024? I know for venture capital, it was way down, and people complained a lot and said it's going to take years for this to come back. But your model is a little bit different. It's sort of unique. It's more syndicating. So did you have a good or bad 2024? What do you think?
I had a good 2024. I'm an optimist, I'm an immigrant, so because I'm an immigrant, I have to be optimist about things. You don't leave everything behind you and show up over here hoping that things will be bad. You're gonna have to look at it. 2024 was better than 23. That's a given. And COVID years, if you watch the movie The Avengers, there was that 5 years of blip. Those COVID years were like a blip. Just erase those and just forget about them. So comparatively to 2019, it was much better. But compared to the prior year, IPOs were low, M&As were low. So it wasn't the best. But 24 was a transitional year for our country, the US. Elections and many other things were going on. So I think 25 is going to look better.
Tell me about that. What do you expect to happen in 2025? You think investment activity will be up, angel, venture, private equity, et cetera?
I think there will be a tick up, maybe 2 ticks up. Just generally speaking, we have more stability at the top level of the executive branch and the legislative branch, so we don't have too many parties fighting among themselves. That's going to put a sense of ease for us on the investment side. I think the new administration is more pro-business, if that's the right word to say. So that may help things a bit. If we do settle down the wars and everything, that may help the world around us. But the other things regarding tariffs and everything, I don't know what that will do. As far as investment goes, AI is still relatively hot, not hot, relatively hot. The frothing is gone. I think we have more tangible deliverables from this AI solutions. The investors, myself included, are starting to see where this can go and how it would work. DeepSeek has shaken the market. It's not a bad thing. It's not a good thing. It's just an expected thing. Competition is good. Being able to use existing hardware or similar to it to create a level of value that is unprecedented is great. Whenever the utility of any service like AI
Yeah.
becomes affordable, it's going to create a lot more innovation and substantially more movement forward.
Yeah, I'm going
Now,
to take a deep dive into all those things, but at a high level, which sectors would you say are really hot for 2025 for investment?
enterprise software where AI is leveling things up will be a go. That's where the direction is going. That's sticky. Food, which means ag tech. Ag tech is a never-ending story. It's not a nice to have, it's a must-have.
Mhm.
Unfortunately, dual use technology, civilian and military, is going to be on the rise for a very, very long time. Health is going to remain to be top-notch because, again, it's a must-do, not a nice-to-do. And there's been enough progress, technology, and data, and of course, Mr. AI or Miss AI is helping move that forward. However, the business of hardware, semiconductor business, is on the rise. 2 years ago, it was a persona non grata. Don't touch it. Now, I'm supporting a semiconductor company, and I have a lot of investors who never looked at hardware come and talk to us. Say, what are you doing? What's going on? What are you working on? Because it's going to be somewhat fundamental to the enablement of AI. And last but not least, the energy business. We're going to run out of energy, whether you believe it or not, it will happen. And if we don't find solutions to address those, then we'll be in trouble. That demand will generate enough investment opportunities to move the needle up.
On that, not to blindside you, but at our annual
I told you I love you, not that much though.
at our EdTech conference where you were a panelist, you made a comment there that I've been thinking about, for about 3 months now, and I've been meaning to ask you about this. Is one of the companies presented, and there were two things. You said, I remember exactly what you said. You said, I don't love the fact that you're doing chemicals and that you're moving that industry from China to here. And I've been, I'm kind of, so you didn't mention in any of this, like heavy industrial companies. And I get that's just not a sector for venture capital. But I've been meaning to ask, is it more of a sustainability thing? Is it an ESG thing? Why you would shy away from that? Or do you think it's just a dead industry and the world is moving in a different direction?
Mostly on the venture side. It's not that particular opportunity wasn't venture type. It could be great for family offices and other investment models, but not for the venture. It wasn't substantial growth. But I don't want to date myself, but I grew up at a younger age with massive chemical spills and thousands of people dying in India and here and there. And when I think about that, I see those visuals of screw ups,
Mm-hmm.
and it will happen. I just don't want it to happen in my backyard.
Yeah, gotcha. Well, the good news is a lot of the agriculture technologies that we're seeing are replacing chemicals with biologics, with machines, with AI, in fact. So it's making the world a cleaner place, I think.
And just to add to that, Roger, I think we as humans, we continue to level up, 3 steps forward, 1 step back, 3 steps forward. So this notion is we're going to create less harmful, more friendly, probably screw up a couple of places and then move up. And that's just the nature of humanity and in general.
Yeah, I think we
But
need
wait a minute. How come you remember that from 4 months ago? Was it that profound or you just
it. I don't know. Just occurred to me that I would always kind of wonder what you meant by that. So now I
yeah,
know it
no
was just
worries.
a venture. Yeah.
That's it.
Um, but on that, the 3 step forwards, one back. I think we need some smart tech people like maybe your network VC syndicate to start working on technologies for fire prevention. I mean, and there are two big problems that I feel like I've seen some startups approach it, but not in a way that I'm kind of hoping that that it'll be solved. And one is fire and one's water here in California. And it seems there are technology solutions out there, or there should be, or somebody should come up with it. I don't know if you've got a comment on that.
I've seen, there's multiple solutions. Just the low-hanging fruit is deploying such solutions. I've seen companies out of Korea and Japan who are able to detect fires at a very early stage and communicate. I've seen sensors who are able to detect when something hits a wire enough to say, oh, we got a problem, and trigger a signal. The technology, I don't want to say it's out there in a very emphatic way, but there's enough core tech that the bundling of it and curating it just for fire detection is important. However, is this a California problem or is this a national problem? And that changes the dialogue, I think.
Right.
The other part of it is the money. Who's going to pay for it? If PG&E is listening, my electric bill just shot 2x in the last 3 months. What am I getting in return? I'm not getting better electricity. I'm not getting a cleaner electricity. So the cost to do this is going to have to be passed to someone. And who is that? Is it the insurers? Is it the government? That's the heart of the matter, Roger.
Yeah. Okay, so let me pause on AI then, since you can't have a discussion anymore without mentioning AI, it feels like. And last week, the news about, DeepSeek and how they did it so inexpensively. Maybe they did, maybe they didn't, I don't know. But I got to tell you about something that happened. So this weekend, there's all these LLM, large language model tools, and you picked three of them, the three biggest, most popular, and I gave it a question, a complicated tax question. It's a 1031 exchange question. All three of them gave me the wrong answer. And I said, you forgot that, you calculated what we call boot incorrectly. This is the rule for boot. Now what do you think? And they all said, oh, that's right. And they gave me another answer, what was still wrong. And I said, well, now you've and these are mistakes that first year law students would make. So I kind of knew it would make that mistake. And I said, yeah, you miscalculated how you net liabilities. Now go look this up and come back. Finally, after the third try, they gave me the right answer. But I'll tell you, it did not inspire a lot of confidence in me, in AI. What do you think about that? Is AI as good as they say? Has it got a lot of ways to go? Should we be relying on it?
First, you should charge for the services you render to all those LLMs. You just do better.
No kidding.
AI is super early. Anybody says it's been around for 30 years. Yeah, we know that. But it's going to evolve again and again and again. And these LLMs or any other models, they rely on the usage of it to get to where you want it to get to. I remember back November when I first started choosing, like, this is stupid. But now it's not that stupid. The idea is we can't expect a 4-hour Amazon delivery from AI where you order it shows up like you want it. This is going to take cycles in different sectors. In the legal sector, maybe a little longer because it's a bit complicated. Give me a job description for a software engineer, that should be out there. So it's all about utility and how much people will use it. The sad part is we're trained to accept what comes out of the internet as spot on. And that pain of addressing, is this outcome correct or not, is going to hurt a lot of users unless they understand that this isn't quite baked. If you have a startup idea, here's one. Create a metric on the outcome to say this is 80%, 50%. Give it a score of some sort so the users would understand how much to trust it. But I promise you, if enough Rogers go out in there for the next 6 to 8 months and do what you did, it will be a 4th level law degree student answer. Your situation is simple. I think most people right now, the consumers are using it for simple things. The problem is when you put it in the business. And that's what I think personally.
Mhm.
AI enterprise level to level up the corporate back office and operations and processes, that's going to be a thriving business, for it will truly move the needle for productivity, profitability, operations, and what have you. A quick example, CRM. 10 years ago, what was it? A glorified spreadsheet? Can you live without a CRM right now? Definitely not. What does it do? It does everything except wash your laundry. So this AI is going to level up and it's going to take the corporate back offices, ERP, CRMs, blah, 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 and move them up to a point where 80% of what we do today will be behind us. That's why I'm investing in that space.
CRM?
No, back office AI leveling.
Oh, I see.
There isn't
Okay.
going to be one AI solution that's going to solve everything.
Uh-huh.
There's going to be layers. Take the operations and move them up, HR, ERP, and slowly level things up as a function of displacing human with AI, but bring in a lot more collateral and content and intelligence to the operations.
Yeah. And I don't want to be, negative about AI. I think it is helping and it's doing a lot of
We all
stuff.
should be negative about it. It's not there yet.
It's not there yet.
No, not even close.
But for example, like even, I've been listening to people talk about the use of AI in healthcare and as a tool to assist physicians in making diagnosis, and it's getting better and better all the time. So I'm not anti-AI. I'm just saying that.
You remind me of my mom, bless her soul. When I was 14, 15, I wanted a calculator. Mom, if you're watching, please don't get upset. She's up above there. And I wanted to buy a calculator. She said no. Eventually, I saved enough money and I went and bought one. And she got very upset. She said, "This thing's gonna rot your brain. You're not gonna be smart enough." But Mama said, "All I'm doing is I'm doing my calculus. Instead of looking at this big book with these tables, I'm just punching and it speeds things up for me." My point is, we're going to get to a point where the dependency on the value of AI is going to be a second nature, like a calculator 40 years ago, like a computer 20 years ago, like the internet 15 years ago, where it was new, but then it became indispensable.
Yeah. Or like Google Translate.
Yeah.
20 years ago when I visited a foreign country, I would actually do this. I'd sit down and do my best to learn the language. And I don't have to do that anymore. So I've gotten dumber because of Google Translate. Like I was in Japan a couple times last year, and rather than learn Japanese, I just pulled out my Google Translate
Yeah.
and told me. Um, okay, shifting gears, you kind of alluded to this earlier, but I do want to, not to get all controversial. You said the change in the administration is going to have an impact in 2025. How so? Is it good or bad?
It's neither good or bad, right? It's a change. It's a substantial, significant change. If you take any organization, a family, a tribe, a company, a city, a village, a country, and you're changing the direction, you're changing the ideology, not the ideology, you're putting on different metrics and different expectations. It's going to change, and we're all going to feel it. Whether you are for or against it, we're all going to feel it. And we're a very large, massive country, very complicated, very sophisticated, very intricate. These changes, whether they're small or large, are going to shake things down. So on the investor side, I personally think the lack of turmoil in Congress is at least just accept it and go with it. It's not like going to be whether this bill will pass or not. It's going to be all right. We know what it is, whether you want it or not, just go with it. Go with the flow because that's what's coming down your way. The changes in the financial policies, they could be positive. Yesterday, it never thought. forgive me, people, if I am controversial here, but they announced they're creating a sovereign fund in the United States. I'm like, huh, how come I never thought about that? All these countries have sovereign funds. So we're going to create a sovereign fund for the US. The idea is if the government invests in a technology that helps something, like I think the example was we funded the COVID vaccine. Why couldn't we just be part of the growth of these companies that benefited from the funding? Uh, Regardless of how you think of it, it's not a novel idea, but it could actually change things.
Yeah, that's interesting. I'm embarrassed to say I had not heard about that.
Yeah, don't be. It's less than 12 hours old.
Yeah, but
Literally, I thought yesterday.
oh, okay. But I have noticed over the years that other countries, like in Europe especially, they will invest in companies. They'll get money from the government. But what you're talking about is a little different. It's about how about instead of a grant, we make an investment so the government participates. Kind of like the way a university might license their tech, right? You're getting something from us, we should get some equity back. That actually sounds like a really interesting idea. That would be that actually sounds good.
There's some positive, I mean, no judgment. There's potential for better deployment of capital and hopefully some return on investment for the taxpayers.
Mhm.
Again, I'm not advocating one way or thing or the other, but that was a thought like, that's an interesting approach to doing things. The other side, the more closer to home, um, I think there's a need for IPOs and there's a great need for mergers and acquisitions. Whether the financials make sense or not is yet to be determined, but there's been a lot of capital locked up in investments, and some of these investments need to be released in the wild and have them give some money back to the LPs and the funds. And it's not moving fast enough. In Europe, there's a glimmer of hope that it's improving in Europe.
Mhm.
That's hopefully positive. AI is not frothy. So I think as investors, we're starting to see the true value of what it does, whether it's AI agents or some better compute or better power consumption or something, or enterprise class solutions is good. The consumer side of the AI isn't that attractive to me because it's ever moving. It reminds me of the apps. There's an app for this and there's an app for that. There's an AI for this and the AI for that. And before you know it, it'll converge into something more rational.
Mhm.
Hopefully the economy is going to get better and better and better. It's not bad. It's just going to continue to improve. And in 6 to 8 months of the new administration, I think there'll be a direction. There'll be a trajectory where people would say, all right, let's get with the program.
Mhm. Okay. Well, you're very optimistic and hopeful, and I'm glad to hear that, as we have to be here in Silicon Valley. But I'm with you. I'm looking forward to a good 2025. It certainly has started out with a bang, in a lot of ways.
A big bang. Big bang. So I
Okay.
have a question for you.
Oh, oh, question for me. Well, let's turn into tables. Okay.
Who's your Super Bowl candidate?
I'm really not a big
Come
football fan.
on, Roger. You got to pick one. This is
I,
not political. It's just a game.
okay, well, I don't know. I don't even know who's playing.
I'm rooting for the Chiefs. That way they have a three-peat and they make history somehow.
Well, if you're rooting for the Chiefs, I will too. You know, who
Plus,
can be?
they're red. They look like the Niners, so we can just pretend.
So isn't that Taylor Swift's team?
Uh,
I guess I got to edit that out.
don't let the NBA, the NFL know that. The general atmosphere in the valley is extremely optimistic.
Uh,
Yeah, we are well past the COVID thing, so that's positive. The activities, the engagements, the level of interactions is back above and beyond 2019, in my humble opinion.
mhm.
These aren't just mere activities of events, and there's transactions taking place these activities generate transactions, generate traction.
Mhm.
I was at CES last in January. There's quite a bit of international presence in the USA from startups and investors.
Mhm.
A tremendous amount of startups came from overseas,
Mhm.
in by the sea container, not by the dozen, hundreds.
Yeah.
The technology was exciting. It
Mhm.
wasn't a me too.
Mhm.
It was a bit different, a bit more competitive. A lot of them had edge. That's going to help us in the valley to be more competitive. You need somebody to nip at your heels. If you don't have that, you're going to just slow down. The capital from other parts of the world is coming back. I was in Saudi Arabia October and got connections in Dubai and other places. There's a lot of interest into reinvesting back in the valley.
Really?
Yes, sir. The initiatives in that part of the world are to create the seeds to grow to the next level. But the capital gains are most likely coming from here.
Mhm.
And just now that the VC is picking back up, there's a lot more interest to come back in.
Good. Good to know. Glad to hear it. It all sounds good. It sounds like the Silicon Valley is the place to be.
It is.
Well, Jordan, I don't want to keep you from being out there investing in startups. So I'm going to let you get back to it, be respectful of your time. I want to thank you for being here. The one last question is if people want to follow up with you and want to talk to you, what's the best way to find you and get a hold of you?
Optimally, LinkedIn is pretty good. Jordan Wahbeh, there's only one. And if you reach out to me, I'll always respond to you. Roger, it's always a pleasure to be here. I thank you for the opportunity. Hopefully, you invite me back. And I'm sure I will see you around in the next week or so. This is a tiny little world.
It sure is. All right. Thanks very much. This is Roger Royce with the 10,000 Startups podcast, talking with Jordan Wahbeh from SV Venture Group and Network VC. Thanks, Jordan. Thanks, everybody. We'll see you all next week.